All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Tuesday, everybody. Today's July 23rd, 2024. And the top story this morning is expect some volatility in Bitcoin markets. We've got $2.8 billion worth of Bitcoin that has been sitting idle for years, has finally started moving as that Mt. Gox bankruptcy is finally working its way through, and just a hair under 15 years or however long it took, or I think it was something like 12 or 13 years for the Mt. Gox bankruptcy to finally work its way through the court system, and the trustee is finally moving that Bitcoin onto the exchanges, which means you can expect a lot of Bitcoin selling in the coming days as that Mt. Gox Bitcoin finally gets unloaded. You know, everybody was talking about the German government, self-included. The German government was selling all this Bitcoin last week. It led to some volatility. The dip buyers bought it all right up. And now here comes Mt. Gox with a whole lot more of it, $2.8 billion, something like 40,000 Bitcoin about to get moving there. But interestingly enough, while that initial movement caused a little bit of selling yesterday, there are some people who have tried to front run this move by selling Bitcoin once they saw those Mt. Gox addresses start moving things around. The buyers, the dip buyers, came right in, but it was the ETFs that bought it up. We had over $500 million of inflows just into the IBIT BlackRock ETF yesterday. So as people are front running the movement of this Mt. Gox coin, sending the price lower, the ETFs are coming right in saying, thank you very much for the dip, buying it right back up. So what does that mean? It means we're going to have some volatility for the next few days, probably some big swings. Be careful, you guys who are out there on leverage. It's a good way to get stopped out. You could have a big dip come in, you get liquidated, and then the dip buyers buy it right back up. You're out. They got your Bitcoin. You lost a whole bunch of money. So be careful if you're messing around on leverage. Also, we got some news from Swan Bitcoin. They're canceling plans for their mining business. They're canceling their IPO, and they're even laying off some staff. So be careful with that one. We'll talk a little bit more about Swan. By the way, Swan, that is among the referral links, one of the few referral links that I do use on this channel. Do not leave your crypto on the exchange. Do not leave your Bitcoin on the exchange. Yes, that includes Swan. So the reason I use Swan is because they have the lowest fees and because you can set it to automate, but I never leave my coins on the exchange. So keep that one in mind, guys. Also going on this morning, we got a lot of earnings out. We got earnings from GM that looked pretty good. Profits up 14% year over year, revenue up 7.2%. Seems like some pretty good numbers from the auto industry, even though all the data that we've had, repossessions are on the rise. We've had total auto sales down in the U.S. Seems like GM is doing okay here. They did mention 22,000 deliveries of electric vehicles. That's up 40% year over year. Emphasis on the word deliveries, though. That was not electric vehicle sales. That's what they delivered to the dealership. Something to keep an eye on there. They have been reducing their plans for electric vehicles while doubling down on internal combustion engines. We've also seen a lot of price cuts from auto manufacturers. The price of new cars has just barely started to tick down. We got our first negative year-over-year numbers in new car sales over the last few months. Used cars, of course, have been plummeting. So that's one to keep an eye on this morning. We also got earnings from Coca Cola that were pretty hard to interpret. We'll talk about some of the obscure data points that they're using in Coca Cola earnings and see if we can't glean what is going on in the economy there. Earnings per share up 7.7%, revenue up 3.3%, roughly in line with inflation. So things are looking okay at Coca Cola. Lockheed Martin reported earnings today. Their earnings per share up about 1.5%, 1.6%. And considering the whole world is marching off to World War III and people are buying F-35s left and right, you'd kind of think Lockheed Martin would be doing a little bit better than they are this morning. I wouldn't say disappointing earnings. It's being reported as an earnings beat. But all things considered, I think Lockheed Martin would be doing a lot better than they really are here. And last but not least, we got Comcast earnings. And Comcast is interesting because I know you're probably thinking their core business, cable, right? Who uses Comcast cable anymore? The cord cutting is still going on. Yes, that's an ongoing decline for Comcast. But importantly, what we're seeing with Comcast today is what their studios and what their theme parks are reporting. And what does that tell us about the health of the U.S. consumer? So we'll take a look at that one towards the end of the stream. Got a lot going on this morning, guys. Why don't we shrink my big melon of a head and let's see what is happening in the world today. And don't forget that like button for the algorithm. And if you're new here, hit that subscribe button right next to it because we do this every morning. So come and have your coffee with the melon heads and I as we go through markets. The S&P is just barely positive right now. It's been back and forth between positive and negative all morning. It was negative when I posted the stream, hence the bear thumbnail. But right now it's up 2.5 points or 0.05% ahead of the opening bell, pretty much unchanged from yesterday. The Dow is up 21 points, also 0.05% higher, just barely in positive territory. And the NASDAQ is negative, down about 16 points or 0.08%. So stocks not really making a lot of move despite quite a lot of earnings coming in today. We've got a slightly stronger dollar here, up 14 basis points at 104.46. And looking over in the bond market here, we've got mostly red in the bond market on the yields today. That means slightly higher bond prices, sending the yields a little bit lower. Notably on the long end of the yield curve, the 30-year Treasury is at 4.454. That's down 2.5%. The 10-year is at 4.231, down 3 basis points. I'm sorry, I said the 30-year. I said 2.5%. It's the 30-year is down 2.5 basis points. So that's a 1/10 of a percent or 100th of a percent. Sorry about that one, guys. The 2-year is at 4.506. That's down just under 2 basis points. And the 1 month is at 5.372, essentially unchanged for the day. And Jack totally butchered the bond market report today. Sorry about that one. And looking over at precious metals, we got a mixed bag here. Spot gold is higher by $10, back above $2,400. It's good to see that 24 handle there at 24.06 and 82 cents. That's up about 0.4% this morning. Spot silver, though, can't catch a break. $29.01 here, down another 12 cents this morning, or 0.4% lower. So we got gold and silver heading in opposite directions here. September copper futures are down 1.25%. October platinum futures are pretty much unchanged, along with palladium futures. And September WTI crude oil at 77.64, down another 78 cents this morning, or about 1% lower. Oil continues to tick lower here, guys. That's kind of flashing a little bit of a recessionary signal there. Again, still in the range that oil has been in, high 70s to low 80s. We've been here for a couple of months, but it's been very quietly ticking down over these last few months. Let's take a look at the silver chart. It looks like silver is trying to put in a bottom here, right about the same place we put in that bottom back in, what was that, the end of June. Seemed to be right around the same spot here. So hopefully silver catches a bid at some point. That all-important level at 28.30 still holding, though. Also, on terms of precious metals, we saw this one. Shout out to my moderator, Mish, caught this one this morning. India slashes import tax on gold and silver to tackle smuggling. So they're trying to convince people to buy more the traditional way and not buy from the illegal importers here. India slashed import duties on gold and silver on Tuesday in a move industry officials said could lift retail demand and help cut smuggling in the world's second biggest bullion consumer. Higher demand for gold from India could boost global prices, which hit a record high this year, although that could widen India's trade deficit and put pressure on its ailing rupee. It's a massive step in the right direction as it will reduce the incentives for smuggling of gold. It will create a level playing field for honest industry stakeholders, said Sachin Jain, CEO of World Gold Council's India operations. The government said it will charge 5% basic customs duty and 1% agriculture, infrastructure, and development cess, or AIDC, on gold and silver imports, lowering the total import duties to 6% from 15%. So maybe that spurs a little bit more retail demand for gold and silver. Could put some upward pressure on prices this morning. Now let's talk about the main story here. Expect some volatility, guys. Bitcoin price mostly unbothered as Mt. Gox moves $2.8 billion. There's signs investors have been buying the dip, said analysts, but Bitcoin traders are still in for a news-driven and volatility-filled week. Could have a bumpy road for Bitcoiners here. Bitcoin briefly hit the skids on Tuesday morning as the Mt. Gox trustee moved more than $2.8 billion worth of Bitcoin into two different wallets, according to the data collected by blockchain analytics firm Arkham Intelligence. One of the wallets received $340 million and the other $2.5 billion worth of Bitcoin during Asia trading hours. Mt. Gox moved a total of 2.85 billion Bitcoin $2.85 billion worth of Bitcoin to new wallets this morning in order to distribute 5,110 Bitcoin, which is about $340 million, to 4 separate Bitstamp addresses, Arkham wrote on Twitter. It was just a week ago that Kraken confirmed that it had received funds from the Mt. Gox trustee and would be distributing them to creditors before the end of July. Bitstamp, another of the 5 exchanges tasked with transferring Bitcoin and Bitcoin Cash to creditors, has said it will begin its distributions as soon as possible and not take the full 60 days it was allotted. So there is a lot of Bitcoin that has been tied up for years here. Mt. Gox went bankrupt years ago after the hack. All right, it's finally getting moving. Now, I just want to add, all of this Bitcoin doesn't automatically get sold, but a lot of it probably will get sold. I think it's safe to assume at least half of it is going to get sold. A lot of these people have had their money locked up here for over a decade, and so they're probably going to be eager to get at it. They're looking at a lot of profits here. Even though they lost a lot of Bitcoin, the price of Bitcoin has rallied so much, these people are still going to be way, way in the black. And so a lot of that could turn into selling, and you're seeing a little bit of front running. Maybe Bitcoiners are selling, anticipating a big move down. But wait, guys, if you were selling, anticipating a big move down, well, I got news for you. The Bitcoin ETF buyer scooped up your Bitcoin on the cheap. This is Bitcoin ETF inflows. These are all daily charts here, and this is courtesy of Zero Hedge has been putting these out. And check out yesterday, over $500 million of Bitcoin ETF inflows. Notably, look at the black bar here. That's the IBIT, the BlackRock Bitcoin ETF. $526 million of net inflows into IBIT yesterday. Guys, a lot of people buying the Bitcoin ETFs. So if you're dumping your Bitcoin, expecting the volatility here, expecting a big sell-off from the Mt. Gox, all you're really doing is selling your Bitcoin at a discount to the ETFs, who are more than happy to buy it up. Now, also going on this morning, we've got a lot of news from Swan. Shout out to Protos.com, which is an excellent crypto-centric news website. I don't want to say they're anti-crypto, but they're somewhat crypto skeptic. They call out a lot of frauds, and rightly so. Their FTX coverage was excellent. Got some pretty good coverage of what's going on with Swan this morning. Now, keep in mind, guys, Swan is one that I keep in my affiliate links down below with the asterisk. Never leave your Bitcoin or any crypto for that matter on the exchanges. You always want to self-custody. But Swan is showing some signs of weakness here this morning. Swan abandons mining and IPO and lays off employees. Swan, a firm focused on offering Bitcoin financial products, is abandoning mining, shelving its plans for initial public offering, and laying off employees, according to a post on X, formerly Twitter, by the firm's CEO, Corey Clipston. Swan's managed mining business targeted large institutional investors with the opportunity to partner with it and invest in mining facilities. The initial announcement of this product noted that Tether, red flag there, that Tether had already dedicated substantial capital to establishing a major presence in Bitcoin mining, much of it through Swan. In a statement to Protos, Tether said, Tether's hosted contracts with Swan's mining entity are unaffected, and we do not expect any interruptions. The team running such operations is segregated and will continue operating normally. Apparently, despite the partnership with Tether, the unit has failed to deliver on Swan's expectation of significant near-term revenue. This apparently led to the decision to delay an apparently planned IPO. So Swan's getting out of the mining business. They didn't make money. We just had the Bitcoin halving a few months ago, right? And with halvings, the payouts to miners get cut in half. And even though Bitcoin's price has rallied pretty substantially, it hasn't been enough to make Swan's mining operation profitable. So Swan is pulling the plug on that one. That also means they're laying off a lot of people. And I'm guessing the reason they're canceling the IPO is because they lost a lot of money. And this is not a good time to open up your books to the public via IPO when you just lost a bunch of money on a mining operation. So Swan is canceling those plans. Again, guys, I use Swan. I automate my Bitcoin purchases a little bit every week, but I immediately take self-custody of it. Do not leave your Bitcoin on the exchange. Swan is showing some weakness here this morning. But the price of Bitcoin, to be honest with you, with all that news, with the Mt. Gox and then the big ETF inflows and then Swan having trouble, price of Bitcoin holding up all right here this morning. It's at $66,430 as priced on Coinbase. That's down about $1,100 So off of the highs that we saw a few days ago, it sold off for 2 days in a row. But again, a lot of ETF inflows, so there is some dip buying going on that is mitigating those losses. Now, on to the earnings calendar here. We got a lot of earnings in this morning. Let's start with General Motors because this is a big one. GM stock rises as company reports 14% higher profit and lifts their outlook. General Motors stock was up 3.8% in pre-market trading on Tuesday after the auto giant reported a larger than expected 14% jump in second quarter profit and lifted its outlook for 2024 earnings. GM said the quarter marked its best U.S. sales since the fourth quarter of 2020 and its eighth straight quarter of year-over-year consecutive U.S. retail sales growth. The company delivered 22,000 electric vehicles. That's up 40% from a year ago and outpacing the 11% industry-wide growth rate. I just want to add that electric vehicle number, guys. They're saying the company delivered 22,000 electric vehicles. They're not saying they sold 22,000 electric vehicles. Remember, EVs have been piling up on the dealer lots, causing a lot of the automakers to scale back their plans to build EVs, including GM. So that sentence is a little bit misleading there. GM said its net income for the 3 months ended June 30th rose to $2.93 billion or $2.55 a share. That's up from $2.57 billion or $1.83 a share in the year ago quarter. So decent increase in net income. Adjusted profit of $3.06 a share handily beat the FactSet estimate of $2.71 a share. Revenue rose 7.2% to $47.97 billion, well ahead of analyst estimates of $45.13 billion. Looking ahead, GM now expects adjusted 2024 earnings of $9.50 a share to $10.50 a share, ahead of analyst consensus for $9.45 a share, and above its earlier projection for adjusted earnings of $9 to $10 a share. So it's a beat and a raise for GM. And I'd add that GM said it's still planning to complete up to $2 billion in fixed cost reductions by the end of this year. Now, that $2 billion in fixed cost reductions, that includes about 1,300 layoffs that were announced back in December of last year. Probably looking at more layoffs still because $2 billion and 1,300 layoffs, that's still like over $1 million per layoff. So it looks like GM is probably going to be scaling back some of its other operations. There was some other articles that were talking about GM's electric vehicle plans. They're saying they're on pace now to deliver between 200 and 250,000 electric vehicles this year. That is down from the originally proposed 400,000 electric vehicles. So they're still scaling back their EV plans. We've seen some price cuts from GM vehicles. It looks like those price cuts have been successful in bringing some of the buyers back to the table. Emphasis some, not all. But overall, all things considered, and considering some of the pretty bad news we've seen in the auto industry, like the repossessions being up and vehicle sales being down, pretty good report from GM, although the stock not doing great this morning. It was up about 4.5% at one point. Now we're down 1.6%, almost 2% lower here. A little bit of volatility in GM shares, trading at $48.70 ahead of the opening bell. So kind of mixed signals from the auto industry, if you will. And speaking of mixed signals, let's take a look at Coca Cola's earnings, which was also something of an enigma this morning. I was having a hard time digesting these numbers. Coca Cola stock rises toward a 2-year high after a profit beat and a raised outlook. So the headline looks pretty good. Revenue rose above expectations amid a 9% increase, and price and unit case volume rose 2%. And they're using some kind of sketchy statistics here to make things look better than they really are. Shares of Coca-Cola climbed toward a 2-year high in early trading Tuesday after the beverage giant beat second quarter earnings expectations and raised its full-year outlook amid increases in prices and concentrate sales. Unit case volume also rose as growth in Latin America and Asia offset a decline in North America. That's interesting there. We got Latin American and Asian markets doing well while North America doesn't. I wonder, is the currency exchange rate playing a role here? Maybe some Western travelers taking advantage of the currency exchange rate, eating more at restaurants overseas? The stock rallied 1.4% in pre-market trading to put it on track to open around the highest closing prices seen since May of 2022. Net income fell to $2.41 billion or 56 cents a share from $2.55 billion or 59 cents a share in the same period a year ago. So, look, net income is down, even though they're reporting a big growth in earnings per share. So, they're kind of picking and choosing their statistics here. Excluding non-recurring items, such as one-time transaction costs, adjusted earnings per share actually rose 7% to 84 cents, which beat estimates of 81. Okay, so we're back to a good number here. Revenue grew 3.3% to 12.36 billion, which is kind of just right in line with what inflation is. CPI was 3%, 3.1%. So we're kind of like revenue growing just around the rate of inflation, although that is above analyst estimates of $11.78 billion. Now, this is where it gets interesting. They're talking about price and mix. Price and mix is an obscure data point that is like your total pricing plus the volume of sales plus a little bit of, well, what we're selling more of this, less of this. So price and mix is something of a deceptive data point here, but let's just move on from that. Price and mix rose 9% with about 5 percentage points of the increase from markets experiencing intense inflation and the rest from pricing actions in the marketplace. And I read that sentence like 15 times this morning, and I just can't figure out what the hell they're trying to tell me there. Intense inflation in some markets and pricing actions in other marketplaces. I just don't know what the heck they're talking about. Now, concentrate sales increased 6%. That's the boxes of syrup that go into the fountain drink machines at restaurants. So they're saying a little bit of benefit from restaurants here. Concentrate sales increased 6% amid particular strength in Latin America and Asia Pacific regions. So once again, that has me thinking maybe you got North American travelers spending a little bit more money at restaurants in those areas. Unit case volume rose 2% as sparkling soft drinks were up 3%, including a 2% growth in trademark Coca Cola and 6% rise in Coke Zero gross. Meanwhile, North America saw price and mix rise 11%. There's that price and mix statistic again that I'm really struggling with this morning. While both concentrate sales and unit case volume declined 1%. So you're seeing a little bit of pushback from consumers here. You're seeing total volumes down a little bit here, 1%. Concentrate sales down, that's your restaurants. Unit case volume down, that's your supermarkets. So North American consumers spending a little bit less money here at Coca Cola. After all that's said and done, stock's barely moving here. It's up 1% after being down 0.8% yesterday. So really, you're just talking about noise in the chart here. Coca Cola stock trading at $65.41 ahead of the opening bell. Now we got Lockheed Martin. Now the headline, Lockheed beats earnings estimates and lifts guidance, makes it seem like a great quarter from Lockheed, but it kind of wasn't. Lockheed reported second quarter earnings that blew by Wall Street estimates. Again, very, very strong language here. Tuesday morning, Lockheed reported earnings per share of $6.84 on sales of $18.1 billion. Wall Street was looking for earnings per share of $6.46 on sales of $17 billion, according to FactSet. Okay, so higher than expectations. In the year-ago quarter, Lockheed reported earnings per share of $6.73 on sales of $17 billion. So you're looking at, a 1.6% increase in earnings per share year over year. Guys, the whole world is marching off to war, and their earnings per share is up about half the rate of inflation. So, yeah, they beat estimates, but the estimates obviously sucked. I don't think this was really that good of a quarter from Lockheed Martin. However, the stock is up 3% ahead of the opening bell here, trading at $488.20. Year-to-date, Lockheed Martin stock is up a little bit here, maybe about 5% year-to-date. But all things considered, again, the world marching off to war, Western militaries, especially NATO countries, adding to defense spending, modernizing as they send their old equipment to be used in Ukraine, replacing it with modern U.S. equipment. You'd think Lockheed would be doing a lot better than they are here. Now, on to the last one of the day here. Comcast revenue misses estimates, dragged down by parks and studios. Now, Comcast, not just a cable company, guys. Remember, they own a lot of theme parks and they make a lot of movies here. So what does this say about the health of the American consumer? He's cutting back his spending on entertainment. Revenue in the film unit tumbles 27% and the park sales slumped by 11%. Studios has a dearth of blockbusters after 2023's Super Mario. Are we calling the Super Mario movie a blockbuster? Was that really a blockbuster? Okay, Comcast, if you say so. Good luck with that one. Comcast reported second quarter revenue that missed analyst estimates, dragged down by a slower season at its movie studios and theme parks. Revenue fell 2.7% to $29.7 billion, the company said in a statement Monday, missing the $30 billion average of analyst projections. Revenue from studios tumbled 27%. There's your movie number, while sales at theme parks fell 11%. And there's your travel number. All right, 27% reduction in studios. Americans going to the movies less. 11% reduction in theme parks. Americans are traveling less. We've seen this in airline stocks. We've seen this in hotel stocks and restaurant stocks. Now in theme parks, guys, the average American, he's out of cash. He's cutting back his spending on travel, entertainment, all the things that make life worth living. Pretty much he's cutting that back because everything is going to rent, to food, and to utilities. There's just nothing left. After having two of last year's highest grossing films, the Super Mario Brothers movie and Fast X, Universal Studios didn't have a blockbuster to compare with those in the last quarter. Yeah, Hollywood hasn't produced a decent movie in a long time, guys. Tell me something I don't know. In the company's largest business segment, providing cable, internet, and phone services, earnings before interest, taxes, depreciation, and amortization rose just 1.6% to $8.48 billion. It's about half the rate of inflation. That was ahead of Wall Street forecasts, driven by cost efficiencies and 322,000 new wireless phone customers. The Philadelphia-based giant, which operates the Xfinity brand of internet and cable services, lost 120,000 broadband customers in the period as competition heats up from other telecom companies offering wireless internet alternatives. We just reported on Verizon a few days ago showing they had very strong growth in their internet customers. They are, let's just face it, they're eating Comcast lunch. Fios is blowing away Xfinity right now. Comcast stock, all things considering, holding up all right here, down just 3 cents or 0.08% at $39.50 ahead of the opening bell. That's after losing 1.4% yesterday. So all things considered, Comcast doing all right. It could have been a lot worse for that company. And I just want to say thank you so much to Renaissance Novice. Appreciate the super chat and support of the channel. Thank you for being a Melonhead member for 3 months. He says, I expect bigger moves in Bitcoin Forex, Bitcoin Cash, and BSV. I'm not sure which one BSV is. Yeah, look, like the whole block size wars, Bitcoin Cash, I can't stand Roger Ver. I really don't like the guy. He's such a jackoff. I'm sorry. Did I say that out loud? Shouldn't have said that. Yeah, Bitcoin Cash is another one of those ones. There's a lot of Bitcoin Cash was locked up at Mt. Gox. I don't know much about BSV, so I can't comment on that one. And there's just not that many buyers of Bitcoin Cash these days. It's kind of riding Bitcoin Core's coattails. So I think Bitcoin Cash is probably going to be a lot more volatile. That's a very good point, Renaissance Novice. I kind of glossed over that one earlier. Whatever Bitcoin does, Bitcoin Cash probably going to make a bigger move to the downside anyway. Yeah, I'm not a big fan of any of the Bitcoin forks. And you're right, they're going to make bigger moves because there's just those markets are much less liquid than the Bitcoin market is. Thank you, Renaissance Novice. I appreciate the super chat and support of the channel. And thank you to Mr. Zeeble Fritz for being a channel member, for being a Melonhead for a month. He says, Milestone chats have a 50 chat limit. Happy Tuesday. I didn't know that. They limit you guys to 50 chats in a stream. Sounds like Zeeble Fritz used up all 50 of them. Z's got a lot to say today. Well, I thank you for the engagement, sir. And once again, thank you for being a channel member. I appreciate that very much. And thank you to Cole Marsh, who says, if you don't know, I don't know. Coffee time. Once again, good vibes from Cole. Thank you, Cole. Always a positive note in the morning. I appreciate that very much, brother. And thank you to Mr. Andy Lunchbox, the one with the 2 X's. Thank you, Andy Lunchbox. What did he send? A super sticker? He sent a number 1. Well, thank you so much, Andy Lunchbox. I appreciate the super chat and the support of the channel and all those good vibes. Thank you guys for having your coffee with the Melonheads this morning. Thank you to all my channel members and magnanimous Melonheads. Links down below to all that good stuff. Should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.